Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on ServiceNow, Inc., a leading provider of cloud-based platforms and solutions that help enterprises automate workflows and streamline operations. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
ServiceNow has rapidly become a key player in enterprise software, but from a behavioral finance perspective, how do biases like overconfidence and confirmation bias influence their decision-making, especially in areas like product development and market expansion?
Overconfidence is particularly relevant to ServiceNow's approach given its rapid growth and success in the enterprise software space. The company's leadership in workflow automation and digital transformation may foster a belief in their ability to replicate this success across new products and markets. This confidence can drive aggressive expansion strategies and significant investments and are aimed at maintaining their competitive edge. However, overconfidence can also lead to underestimating the challenges of entering new markets or developing new products, particularly in a highly competitive industry. Confirmation bias also plays a role in ServiceNow's strategy, particularly in how the company views the success of its existing platforms. The positive feedback from customers and the market may reinforce their belief in the effectiveness of their products, leading them to favor information that supports their current strategies while potentially overlooking emerging risks or alternative approaches.
And this focus on leveraging their existing strengths while expanding into new areas has helped ServiceNow sustain its leadership position in enterprise software, appealing to both customers and investors who value innovation and growth.
Exactly. ServiceNow's strategic use of overconfidence in driving innovation and confirmation bias in reinforcing their existing strategies appeals to investors looking for a company that is committed to maintaining its leadership in a rapidly evolving industry. However, this approach also means that ServiceNow must carefully manage the risks associated with rapid expansion and ensure that their innovation efforts continue to align with market needs.
Let's talk about diversity, equity, and inclusion at ServiceNow. As a global technology company, DEI is particularly important for ServiceNow. How does this intersect with behavioral finance?
The approach to DEI is crucial, especially as the company operates in a highly innovative and competitive industry where diverse perspectives can drive better decision-making and product development. From a behavioral finance perspective, strong DEI initiatives can enhance ServiceNow's ability to innovate by fostering a culture that values diversity and inclusion. A commitment to DEI allows ServiceNow to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the enterprise software industry. For investors, ServiceNow's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help ServiceNow build stronger relationships with customers, partners, and communities, which is vital for long-term success in the global market.
Investors are increasingly considering DEI when evaluating companies, especially in tech, where innovation and the ability to address diverse market needs are critical to long-term success.
That's right. By embedding DEI into their corporate culture and innovation processes, ServiceNow not only improves its ability to serve a broad range of customers but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, ServiceNow operates in numerous countries, providing workflow automation solutions to a wide range of industries. How does the company adapt to different markets, and what role does behavioral finance play in this?
ServiceNow's global strategy involves tailoring its solutions to meet the specific needs and regulatory requirements of different regions while maintaining its core focus on innovation and customer satisfaction. From a behavioral finance finance perspective, this adaptability is crucial for managing the risks associated with operating in diverse markets. ServiceNow's ability to navigate complex international regulations such as data privacy laws and industry-specific standards allows it to maintain a strong global presence. The company's approach to understanding local market dynamics and adapting its strategies accordingly helps mitigate risks associated with regulatory changes, economic fluctuations, and cultural differences. By ensuring that its workflow automation products are relevant and compliant in different regions, ServiceNow can continue to expand its market share and strengthen its global brand.
And this adaptability is essential for ServiceNow, especially as they face competition from both local enterprise software providers and other global giants. Their ability to maintain their brand's relevance and leadership in different markets is key to their continued success.
Exactly. ServiceNow's focus on understanding local market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the enterprise software industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in global technology standards, data privacy regulations, and competitive pressures.
Now, let's compare ServiceNow to other companies in the enterprise software and cloud computing industry, like Salesforce, Workday, and Microsoft. How do the behavioral finance dynamics differ?
ServiceNow's dynamics are often compared to other enterprise software and cloud computing giants like Salesforce, Workday, and Microsoft, particularly in their approach to innovation, market expansion, and competition. ServiceNow's strength lies in its leadership in workflow automation and its ability to deliver scalable, cloud-based solutions, which appeals to investors looking for a company that is driving digital transformation in the enterprise sector. Salesforce, with its focus on customer relationship management, CRM, and cloud services, appeals to investors interested in a company that balances innovation with a comprehensive ecosystem of business applications. Workday, known for its human capital management (HCM) and financial management solutions, attracts those looking for a company that is heavily invested in optimizing business operations. Microsoft, with its vast portfolio of enterprise software and cloud services through Azure, appeals to investors interested in a more diversified technology company with a strong presence in both consumer and enterprise markets. ServiceNow's behavioral finance dynamics are shaped by its reputation for innovation, strong customer relationships, and global adaptability, making it an attractive option for those seeking growth in the enterprise software industry.
And unlike Microsoft, which has a broader focus on both consumer and enterprise solutions, ServiceNow's strength lies in its specialized focus on workflow automation and digital transformation, appealing to a different type of investor. And unlike Microsoft, which has a broader focus on both consumer and enterprise solutions, ServiceNow's strength lies in its specialized focus on workflow automation and digital transformation, appealing to a different type of investor. To sum up, ServiceNow's approach to business is deeply influenced by behavioral finance principles, whether it's through their innovation strategies, global market adaptations, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives ServiceNow's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.